Rob, thank you very much for being here today. You just finished now moderating a session on bed and hospitality. What is the general feeling? Is it a positive vibe, a negative vibe? How is the market at the moment?
Well, I think it built on the positivity that was in the room generally here. So thanks again for inviting me to a GRI event.
Pleasure.
We really did try to leverage the positivity in the room. We saw a bar chart suggesting that beds and hospitality, the residential bed section, would probably be 60% of people in the room's favourite asset class for transactions this year. We saw great transaction volume in 2023 when other sectors weren't buying and transacting as much. So there was positivity coming from there. There's definitely positivity moving forward. I think one of the reasons the room was positive is because there are a growing number of complementary asset classes within the beds and hospitality sector. And whereas previously student might have been the tour de force in certain markets, we're now seeing extended stay hotels, co-living, build to rent, and the like, kind of filling that space in complementary fashion. So whereas one market, the fundamentals might not suit one asset class, they're starting to suit others in the same sort of area.
And out of the conversations, we had an hour of conversation, different players participating. Is there anything new that you would like to highlight here?
I think two things really came to the fore. So the first was the advent of technology and AI in the properties. This is helping to make smaller schemes and smaller operations work by reducing payroll costs and having more automations. And that's also supporting much larger properties as well with marketing processes. So that's really aimed at both ends of the scale. The opportunity at the moment and a window that the team really felt though is in the retrofitting or the redevelopment of stranded assets or asset classes that no longer are deemed to work. And we fundamentally believe that actually the beds and hospitality sector could be able to retrofit properties, office, possibly retail in markets that were previously inaccessible to it, which could be great sector.
And do you think this is the sentiment that you collected in the audience from any specific country, or would you see opportunities in different parts of Europe?
Yeah, so I mean, kudos to GRI for putting together the panel that was, because we really did have coverage from the Nordics down to Spain, Italy covered there as well. And then you've got the more mature markets within the UK and Ireland covered as well. And those opportunities were being seen in most markets because retail, office, etc. have struggled in most of those markets as well. I think it's fair to say that the observations made by the asset managers, certainly those representing Asian capitals, were more aware of the movement of persons and tourism and the impact that would have on hospitality. And what we really liked about the playing the short and extended stay hotels of that like is that people could flex the length of stay, and that was really exciting. You could control the sort of cash flow there as well, and that gives you a really opportunity.
And where do people see the best opportunities?
Well, funny enough, colleagues in Germany felt that Germany was the best bet, and others felt that Spain was there as well. But I think the opportunity is going to be probably in the retrofitting space of maybe investing in existing stock. Development is still difficult at the moment with interest rates as they are, so the short term, I think retrofitting and investing in current assets is important. But fundamentally, the opportunity will arise where you've got strong fundamentals, whether it's a supply-demand imbalance, and the beds and hospitality sector has that supply-demand imbalance, and will do in most countries for some time.
Interesting. Thank you very much, Robert.
Howard. Thank you.